Hey everyone, welcome to another YouTube Live. This is going to be a little bit different. We're not going to be talking about the cryptocurrency market. We're going to be talking about the stock that is so hyped recently. It's going to be Tesla. TSLA is a ticker symbol, and we see a chart on the the weekly right here. Quickly just bringing it back to the monthly again. So obviously we have seen a massive, unprecedented amount of buy pressure come in within basically the start of 2019 onwards, start of 2020 onwards, maybe from October of 2019. But we've seen a monstrous climb up almost 230% from October of 2019. So obviously there's been a huge amount of news within this stock and a lot of people talking about it. So let's just break it down within this video. We're going to go over what happened basically up to that point. We're not really going to talk about fundamentals so much. So for people who are unaware of the two methods of analyzing an investment, or for me at least, there's fundamental, or FA for short, and then there's technical, or TA for short as well. And this video is going to be mainly talking about the technical side of things, so looking at the chart, looking at the key zones of supply and demand, instead of the fundamental, breaking down the balance sheet, talking about earnings, talking about the catalysts that is making this stock go parabolic, looking at potential gigafactories in China, or pre-orders of Cybertrucks, or their sales of the current cars. But all that stuff we will not be discussing in this video. We're going to be just talking about the chart and the price points and the levels on the chart that we're going to be looking at for any significant areas. At this point, I was looking at some fib extensions, and I personally don't see any real fib extensions in sight. They've blown past all of them. So I'm not going to be trying to perfectly time reversal zones. I'm not going to be doing any of that. All I'm going to be drawing is one single ascending trend line to, for me, try to figure out where the shift in trend is going to be. If you're holding on, I would personally just hold on until you see lower lows and lower highs on some time frame you're looking at. But at this point in time, you have no idea how far this price can go. If you're short, get wrecked. Do not hold short positions if they're broken all-time high. You can never, ever manage risk if you're shorting at an all-time high and you have no idea how high the price is going to go. And this is a very, very good example of that particular situation. Just remember, on a short, the most amount you'll ever be able to make is 100%, and the most amount you can lose is infinite. Whereas on a long trade, the most amount you make is an infinite, and the most amount you can lose is whatever amount of money that you've put into the trade, which is 100%. So definitely, if you're longer term investing or trading or anything that matter, I personally like going long more than short because of that exact reason. You can make more money on the way up compared to the way down for the most part. Unless you are very skilled at short selling, then it's a whole other ball game in itself. So talking about the chart, not really talking about anything else, diving right into the monthly, and then we'll go over the different time frames. The first thing, we're kind of gonna not talk about this massive move. We're just going to talk about the structure of the chart before we had that massive move to the downside, because it looked normal before that happened. Excuse me. So from around 2014-ish all the way until 2016, basically, we were in a consolidation holding a nice level of resistance around $270. We did see some higher highs there, but we were holding in a nice tight consolidation. We can see that right here. Previous level of resistance, new level of support. We'll talk about that in a second. Let's just get our snip here and discuss what we saw between the years of, let's say, 2014 and 2017, the start of 2017. So we saw initial level of resistance turn into 1, 2, 3, 4 level of support. Very, very clear area within the chart. And also at the top, looking at the ceiling of the consolidation, we see 1, 2, 3, and 4 key levels within the chart where the sellers are going to be located. So it's a very, very well-respected, clean consolidation with very, very well-defined levels of resistance and support. Now, once we break above that zone, we enter a new zone of consolidation. So we see this zone right here, which is now our new level of resistance, previous level of support. And we can see there is a smaller zone right here, but we're going to incorporate this larger area. just for this particular example there. So then in the new structure, very similar type of situation where we're seeing the price reject off a key level of resistance. We see 1, 2, 3, 4, 5. All here is a key zone of resistance. And we also see there's a mid-range zone right here. Let's just draw that in on our line. We see initially a mid-range zone, which is holding here, 1, 2, and then we break right down below. We retest it for a validation of a new level of resistance. And then we start to reject down below, but the buyers are able to pick it back up and bring it over the key level here of around $300. And then we retest those highs yet again, but the price is unable to beat those highs of, let's say, 375, somewhere around there. And then we get the price to move back down, holding a level of support, turning into a new level of resistance. And then this, I think, was a huge fake out for the short sellers. And I think a lot of people definitely entered short at this point in time because of a couple of reasons. The first reason, we're seeing lower lows and lower highs. That in itself is a descending zone or a downtrend. So there's going to be more short sellers looking at the market. And then this key zone right here, previous level. Oh, that was a really bad line here. So let me draw that again. So we got a key level of descending, or we got a key level of a support here, a level of demand, sorry. So that's going to be around the $250 range. We got a very, very strong level of demand, which turned into a new level of resistance. And then because we saw the price break to the downside within the market structure right here, I would definitely look to enter short at this point in time, looking at the technical side of the chart. And then I guess unfortunately for the shorts, or fortunately for the bulls, we broke above it. Once we broke above it, it was basically a massive parabolic move, really seeing a shit ton of buy volume come into the market. So now let's take a look on the weekly here, discussing it a little bit more. So we're not going to really discuss this at too much into detail because we've already understood the two structures that we were in. We were in the first structure, and then we were in the second structure, and then we broke down below it, retested it twice, and validated it for a new level of resistance. We see that right here. So this was the zone of resistance. This was the zone. This is the mid-range zone. And this is the zone of support finally within our zone of consolidation right here. And then we see a lot of buy pressure squeezing the price within our key zone. So once the price, there's our initial rejection. This is our first level of confirmation that there's going to be sellers in the market. We see a massive bearish engulfing candle here, where it engulfs the previous candle and it closes very significantly further down the previous open. This is going to be our second level of confirmation that there's going to be sell pressure. We get one more pullback, creating a lower high right here with two weekly candles closing red. That for me is significant enough to potentially add a short on, just looking at the side of technicals, because now we're below our key zone of resistance, and we see the rejection boom, we see the rejection boom, and then initially we saw the rejection on the way down. So there's a lot of sell pressure we see right here, but once we get this big bullish candle, that was probably going to be a lot. So initially, let's just break this down here, because from the weekly, let's just go to the daily and discuss what happened in that initial breakout right here. So there's that pullback that we were talking about. The price was making those higher lows. So this is a low, this is a higher low, this is a higher low. So we just connect that ascending trend line. What we're looking for a short position is for the price to get to the apex right here, break the ascending trend line, which is here, retest a zone of confluence, which is going to be a horizontal zone, as well as the ascending zone of confluence. Once that gets retested and validated as a new level of resistance, then we look to short. But we didn't see that, so theoretically, we wouldn't have shorted at this point in time. But what we can really see is this massive gap from open to close that was on October 23rd of 2019. And what I'm going to assume happened was we saw a lot of people short when the price got below this zone. So within this area of the chart, there's a lot of people short selling, expecting the price to make a move to the downside because of these zones that we talked about on the bigger time frame. So a lot of people are short here. They're going to have a stop loss within the zone because they need to cut their losses at some point, right? So they have to probably put their maybe highs to up here or up here, or up here, or up here, something where there's a previous high, where there's going to be traders looking at the zone saying, if it goes past this area, we're probably going to get taken out. And I'd probably put mine around there, level of support, resistance. So I'd probably put it where the open was right there. So on October, whatever a day that gap was, on the 24th, we saw a massive gap up. So everyone who shorted within this range right here, let's just get our... So everyone who shorted within this range, anywhere from this point here to this point here, is now in the red. They are now in the loss. They're in the red, basically, so they're losing money at this point in time if they sell from here to here, and that's a significant move to the upside. Let's see just from the highest point they could have entered shorts. So this is the loss of a trader if they entered on the pullback with the retest. This is the best case scenario for them that October day, is 17% up at the open. So that is a huge move to the upside. That's a huge loss instantly, right? When you see the market open and the first thing you see is you're down 10% or whatever percent that you're down, depending on when you entered from this point to this point, basically, is when you enter somewhere there. Because a lot of short sellers are going to be entering there because the price is now trading below the range instead of within the range, giving us an indication that the price could come and make new lower lows, which it has. And people were expecting to make the break of the ascending trend line and then make a lower low, potentially breaking the recent low there and then continuing on towards its downtrend. So that's, I think, what a lot of short sellers were looking at. But once this gap actually initiated on the morning of the 24th, this is probably where the momentum started to come in, because I look at the day after, we see a massive bullish candle. This is probably a lot of bullish people initially jumping in after they see the gap, and then also the short sellers wanting to get out of the pair because they've had enough. Their stop losses are hit. They are already in a losing trade and they don't want to just continue holding on to a losing trade after that massive gap towards the upside. So that's the initiation of that bullish move, in my opinion, is because there was a fake out, a very solid potential for the shorts here, because we see 1, 2, 3. We see resistances get held 1 time, 2 times, 3 times. So there's going to be a lot of sell pressure within this area because it's holding our new resistance, which is a previous level of support, and that's a very significant zone on a chart. Overall, that's why we initially saw that massive move towards the upside, in my opinion, is because there was a massive amount of sell pressure within this zone. And what needs to happen in order to close a short position, you need to buy back, and the marriage of short sellers trying to get out of the market, as well as people who are long, who are FOMOing in, who are wanting to just jump at the increasing price, is just going to make it more aggressive than it already is for the move to the upside. So that's kind of how we started the push to the upside, in my opinion. Obviously, I don't have the whole story. I don't really follow the fundamentals of this particular stock or real equities in general, but overall, that is why I think we got the initial momentum towards the upside to really rocket it back towards those recent highs. So now that we talked about kind of the reason why the momentum started, in my opinion, we can then start talking about this massive move here. So there's not a whole lot to talk about because I can't really do a whole lot of TA on something that looks like this on the weekly chart. There's not a whole lot to do. It's just basically breaking resistances and holding supports, or just going straight up at this certain point. So we see, let's just talk about it after breaking the all-time high. So now we can close those because we really understand the structure of the price action. Those can be white because they are zones of sensitivity. This is going to be a very key level on the chart. Looking at it at the weekly, it was a key resistance zone, a previous all-time high, since basically June of 2017 all the way until December of 2018, until we retested it again within November or December of 2019. So we can identify that that is a key zone on the chart, and that's going to play as a zone of sensitivity or a zone of support. There's going to be buyers around that area. If the price has come all the way back to the $3.80 range or $3.80 range, but we have a tremendous amount to go down before that even occurs. We're talking 50% retracement even before we look to bounce at that support zone. So the next question is, what other support zones could we potentially find for a level of support when we do see that pullback that we could potentially use to enter back into the market, if you're looking to enter back into the market? Now, at this point, I think it's very strong towards the upside. I don't know if I'd be even thinking about entering up here, I'd at least want to see some level of a pullback for me to reduce my risk a little bit. Because if you're entering here, what's your risk reward? What's your risk going to be? What are you risking off of? There's literally absolutely nothing to risk off of. Like, the only real level of resistance that I see would be this minor level right here, which we held, I guess, for a couple days there. And that in itself is a very, very fast 25% to the downside. I personally would not be wanting to enter at this point here, but let's break down the move a little bit more and talk about a potential level of support that we could be seeing. So the first thing when I broke this down is I'm seeing the price make higher highs and higher lows, but exponentially seeing higher highs and higher lows, where the price is making a parabolic move, which I think it's in this one or the next one. I think it might be in this one. Nope. Let me just find it here. It's the curved. It's not in this one, which is a little weird, but it's in this one right here. Perfect curve. So it's making a parabolic move towards the upside like we're seeing here, where it's making exponentially higher highs and exponentially higher lows. It's not a straight line where it's making higher highs and higher lows like this. We're seeing exponentially higher highs and exponentially higher lows. So it's going to create a curved shape, which is good if you're on the long side and making money on the way up, but we can see this from basically every single hype-oriented move that's ever occurred in the markets. From tulips to Bitcoin in 2017 to cannabis back when it was pumping in 2017. There's a lot of moves that have this parabolic move that just keep seeing higher highs and higher lows, and that causes a lot of FOMO and a lot of pain and suffering for people who are buying at the top, and a lot of profits and capital appreciation for the people who bought at the lower half of the curve, which would be, I guess, at the breakout point, which is the previous all-time high, which is like 380-ish. And then from there, we've just been seeing astronomical gains. So now talking about the potential level of support that we're able to identify. First thing I saw is this 3 highs right here. So we're going to break it down on the 1 hour chart to discuss a potential level where the price could pull back at, and we can have some level of a reasonable entry. So this is the first zone I saw right here. It's going to connect previous levels of support. So let's get our anchor point, which is very, very important, which is this guy right here. Make sure that is perfectly in line at the very bottom of the wick right there. So that's going to be our anchor point, and then we see that the price tested this very well multiple times, and that is going to be our first support area. So we can see, let's just talk about that support area for people who don't really understand TA. This is the anchor point, meaning this is where the line started. We see a first key level of a bounce right here, where we saw the buyers push the price back up. Second one, not too far away. This validates the zone, meaning there is more dependability on this area. And then we see it hit for the third time, and now we can say it's a dependable zone that we can use to risk off of and to trade off of. So we got first one right here, and then we got 1, 2, 3. So it's a valid zone, so we're going to expect some level of buyers to enter at this zone if the price comes and hits this area. So that's our first level of support that we're able to identify. The second level of support, or areas of supports that we're able to identify, is key zones within the chart where we see zones of consolidation and holding levels of resistance. Our first one is going to be right here. Key level, we see the price respect this 1, 2, 3, 4 all along here. And then when the price gapped up, it did consolidate throughout that day, not very much movement. And then the day after that, we saw a gap and the price just exponentially moving towards the upside. So this is a little bit relevant, or a little bit less relevant at this point, because we're really looking for that ascending support to be held. So now we're going to move our potential support up to this zone, where now we have a zone of confluence here at around the $6.50 range, and that will be the next potential zone of support that we're going to be able to use. So how do we use these zones of support and resistance? So it kind of looks similar, something like this. Let's say this wasn't here and we just saw that move appear. So now let's talk about what we could be seeing in this upcoming one. So we saw the price break this key level of resistance right here, and then now we have a zone of confluence. Let's just take this and go like here. Now we have a zone of confluence, so there's going to be two confirmations that there's going to be bulls in the area. First, key level of resistance, which turns into new level of support. That is the simple premise of trading. Key level of resistance equals new level of support. That is the basics of TA. So that's the first indication that we could get buy pressure within that area. The second indication that we could get buy pressure within that area is going to be the ascending trend line, which has been respected 1, 2, 3. So then this area right here is going to be a high sensitivity area where there's going to be a higher than average probability of the bulls coming in and pushing the price within that zone. And that's exactly what we saw, where the price came up and the bulls started purchasing the coin around, or purchasing the pair or the stock right around here. Sorry, I just trade crypto too much. So this is the area where there's going to be buy pressure within the market. And now we're seeing that same type of structure where you have a resistance, you have a key level of ascending support, you have a key level of ascending support. And where that zone is coming together is a zone of confluence, and we see that zone right around here. So that is the next potential area where the bulls could be lining up to buy. I think buying here is very, very overextended. And then at this point, then you can manage your risk. That is the biggest thing, is being able to manage risk. And what do I mean by this? This is your risk reward parameters. So this is going to give you the reward, which is the green right here, and then the risk, which is your red. If you're investing, you don't need this, but if you're trading, this is something that will be a very, very big benefit to your life. So if you're, let's say you want to enter at this zone, when you've seen the zone of confluence before, like let's say you have a replay right here and you're like, I'm waiting for this zone right here, and you're just waiting for price action confirmation to give you an indication that there's buy pressure here. And let's say you want to enter there, and you enter there, you buy all the shares that you want. Let's say you bought, let's say one share, just for example, you got $559 per share, and you bought one share right there. What would be your risk? That's what you have to make sure you understand. If you're just saying, I'm going to buy here and I have no idea when I'm going to get out, that's not a very good risk reward parameter, because you could easily risk, unlimited amounts until it goes to zero. And if you're a trader, it doesn't really matter. But if you're an investor, it doesn't really matter. But if you're a trader, you really, really want to make sure that your risk reward is going to be a situation where you're going to be happy with it, and it's a dependable system that you can use to make money. So I'm not going to talk about risk reward or anything. Just wanted to talk about risk a little bit. Just for example, let's say the price does move to the downside at this point. Because the buyers didn't actually enter where you wanted it to at this point, you may want to get out at this point. And if the price does go above this zone, you can always re-enter to look to make some move to the potential upside. That's definitely something that every investor and trader should know. You can always take another trade, basically, is what I wanted to say. So I hope you got something out of this. I hope it was useful. Like I said, I'm not going to try to predict where the top is. I have no idea. No trader. If you tried to predict the top before, you are definitely losing lots of money on your short. But in order to try to best understand where the potential zone where we could bounce would be, for me, I'd be looking at potentially the 650-ish range for the next level of bounce. And for a short, or when we get out of the trade, I would potentially say this ascending trend line might be a good situation to get out of the trade, because we've respected it 1, 2, 3, 4 times. So very well respected all around. And it's a dependable area where there's going to be a level of confidence for the buyers while we keep holding this price up. So I hope you got something from this video. I'm not going to be talking about it too much more. I hope you really understand why I thought we made an initial momentum push to the upside, is because a lot of the short sellers here got squeezed out, which initiated the momentum to the upside. And then once we broke the all-time high, it was just all hell break loose. Everyone's buying, all the shorts are getting squeezed, and it was mania all around. So it's pretty crazy. If you're invested in it, that's awesome. If you are short, get the fuck out. It's you have no idea how high you're going to go. You could just be losing exponential amounts of money. And if you're already in, and if you are up, great. If you are still looking to get in, I don't think that entering at 780 would be the best entrance for you. Looking at risk reward, that's pretty skewed. But if you want, 100% go for it. This isn't financial advice, but this is just a opinion of a technical analyst who is mainly in the cryptocurrency market, but also likes to trade other equities and other asset classes as well. So I hope you learned something. I hope this has benefited you, or has gained some, or provided you some value. I don't know what it's going to do, but it was fun for me, and I'm sure fun for the people within the Discord, where we hold our 1,300 member community. So until next time, happy trading. Smash it within the next week of trading. I know you can do it. And if you are looking to have more of a community, would like to talk to people, we have a free community that you can enter for absolutely free. It has a member list of like 1,200 people, has a lot of people who are all very active, and we all just like talk about things relating to finance, entrepreneurship, all that fun stuff. So join if you want, and if not, I will potentially see you elsewhere within the YouTube realm. Have a good one.